Well, we'd like to take some time to answer your email questions. Many of you have sent in questions that you have for Pat regarding your finances. And Pat, this first one is from Drew, who says, Pat, if I can lock into a lower interest rate, luck might be the better word. If I can lock into a lower interest rate on my mortgage now, could that give me a seller's edge 3 to 5 years from now when I go to sell the house, especially if interest rates go back up by then? Would I be able to offer the mortgage at a lower interest rate for potential buyers?
Drew, I don't think a bank is going to transfer your mortgage to a buyer unless the buyer has the same financial qualifications you do. And at that point, they've got a negotiating point. But if interest rates have gone up at the time, the prevailing interest rates, that they're not going to transfer a low interest loan, in my opinion. But there are techniques that you can use, as the so-called 3-2-1 plan, where you would assume the cost of 3% of your interest payments for 1 year, and then 2% the next, and 1% for the third, which would give the buyer a little bit of an edge on the mortgage. But I doubt if you shouldn't refinance unless the numbers work out for you. And the normal rule of thumb is that the expenses of refinancing would be consumed in about 3 or 4 years. So if you're going to stay there longer than that, by all means refi. If not, you don't.
Mm-hmm. This is Marcia, who says, our credit card company wants to close our account since we haven't used it in 6 years. We've been fighting to become debt-free for the past several years, but kept the account open to avoid negatively affecting our credit scores. What should we do? Should we charge minimally to keep the credit going? This is the only credit card we have.
Well, Marcia, you one day might need a credit card. You never can tell. And why not charge a few groceries, something you need, and then just make sure you pay it off. There's nothing wrong with having a 25 or 30-day balance on your account if you pay it down. It's just you're riding on the credit card instead of the other way around. So use it a little bit if that's it. You want to keep it open if possible.
This is Reed, who says, Pat, I'm 55 years old and earn around $100,000 annually. I'm planning to retire early in the next few years, but I'm not sure what to do about my health insurance. I've thought about going without insurance, realizing I'd have about 8 years until Medicare kicks in. Is it worth the risk?
No way. It's like playing Russian roulette. As we get older, things pop up that we can't imagine. Joints go bad, your spine goes bad, you begin to have other problems with your eyesight. There are a host of problems. You cross 55, 60, 65, and bingo, and the prices started going up. And medicine is terribly expensive. One bad bout with cancer, for example, or your heart, could bankrupt you if you don't have health insurance. So don't drop your health insurance under any circumstances.
This is Julie, who says, Pat, you recently suggested buying gold to hedge against hyperinflation. How does a small investor do it? Banks are discouraging the idea. Why?
The banks want to keep the money in the bank. They don't want you buying gold. You can get what's called the ETF. It's the symbol is GLD, and it's called Street Tracks Gold, and it sells for 1/10 of an ounce of gold. So if gold is priced at $800, this stuff sells for $80 a share, or 78 or something like that. You can also buy, sort of the bullion coins such as Krugerrands. They're priced just a tad above the market, so you can just check. There are all kinds of people who sell those things, so you can check in the on the internet or in various advertisements. And just buy Krugerrands. So they're 1 ounce coins. So if gold, as I say, is $800 or $900 an ounce, well, one coin will cost you $900, and you can sock them away. And the ETF Street Tracks is easier. I mean, it trades like a stock.
Okay, this is Carol, who says, my retired parents want to purchase a new car, but they're, concerned about buying one in the current economy. They make about $35,000 per year and are debt-free. How can they decide whether to buy now or not? What factors would you consider in this economy?
Well, I'd always consider how cheap can you get the car, and if you finance it, what are the terms? Some of these car companies are giving 0% loans. They're so anxious to move the iron that they're doing everything in the world they can to back stuff up. But I really am a great fan of 2-year-old cars, because by the time a car is 2 years past the dealer's showroom, it's down about 50%. And you can get some really nice automobiles if your parents are retired, they don't need the latest gizmo. But find some fuel-efficient number that is in good shape. Have a mechanic look at it, make sure it's in good shape. But I don't think I'd buy a new car unless they were giving the things away. But there are some incredible deals out there right now in terms of automobiles. What else?
Hey, this is Dolores, who says, for 2008, I gave more to different Christian organizations than ever before. I don't believe the government needs to know all my donations. Do I need to list all of my contributions on my tax return?
Dolores, I'm sorry to tell you, you do.
If you want the deduction,
I know
yes.
The government doesn't need to know all that, but they ask you if you're going to say, well, I want to declare $10,000 in charitable contributions. They'd like to know who you're giving it to. That's just, the way the game's played.
Hey, this is Kurt. As the sole source of income for my family, I've been unemployed for 2 years and I still can't find a job. I've exhausted my savings and 401k. Now I'm at the point where I can no longer pay bills. I'm considering selling my 10-year-old house with no mortgage to pay off my $20,000 debt. Is it okay to let the bills go for a month until the sale is made, or will this hurt my credit record?
Well, I don't know where your credit record is. It sounds like you're absolutely out of money. I don't know how you got in this condition, and after 2 years, surely there's something you can do. You might not have exactly what you want, or you won't have exactly the salary you had before, but for an able-bodied, intelligent man, there are jobs out there, and there are things you can do in home business. You can be in a consulting business. There are all kinds of things you can do. You just can't sit around and say, well, I couldn't get a job. Something's the matter. It doesn't compute. But if you owe $20,000, I suppose selling your house, if you could find a decent buyer for it, would be the way to go on that. But you've got to get some income in. The question is, should I let my current bills go for a while? I don't know what you're going to pay him with anyhow. I mean, you don't have. Yeah. Well, how does he pay his bill?
I don't know.
He's used the 401.
The 401's gone already, yeah.
And there's nothing left, and he hadn't got any income coming in, so what does he pay bills with? I don't understand. Yeah. So would it be all right to let him go? Your credit score, there's something I'm not hearing in that question.
Yeah, not enough detail.
But anyhow, all I can say is think of something that is needed that you could supply. What is it that, your neighborhood needs? Maybe they need somebody who's a lawn care specialist. Well, set up a lawn care business. Or maybe they need somebody that does babysitting. Well, see if you can't hire some babysitters. I mean, do something that, will get some income coming in. Yeah. And take, if somebody offers you a job, but jobs are tough, but you've probably been holding out for something in the same field that you're good at the same basic salary level, and you've got to lower your expectations.
Take what's available.
Take what's available if it involves washing dishes.